Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. What did we learn in my last video about hedge fund activity from last week? From Bloomberg, hedge funds step up purchases of tech stocks. Goldman Sachs says hedge fund net buying of U.S. stocks picked up last week, right? So what happened today? Amazon stock pops after earnings beat, but I've got Amazon down 3.29% after the bell. AMD beats on earnings, but shares decline on light guidance. Supermicro tumbles after missing revenue estimates. Intel shares suffer worst month in decades. What am I trying to say? I hope the Hedgies are long big tech. I hope they got their asses kicked today, and I hope it continues. What else happened today? Bitcoin faces worst month since FTX crash. But at the time of this recording, I've got Bitcoin over 60,504. It's down 5.33%. You know, in the last 24 hours, the DTCC thing may not be the end of the world for crypto, but it just happened. So, let's reserve judgment. Let's let it unfold, right? Trump's social media firms' rising shares pressure short sellers, S3 says. Well, what can we learn from that? When you push back on the bad actors on Wall Street, sometimes it works. You just have to try. So what really happened today? Stocks sink to end worst month of 2024. S&P 500 down 1.57%. Dow down 1.49%. NASDAQ down 2.04%. And the Russell down 2.09%. I've got crude oil at 81.28, down 0.79%. Gold, time of this recording, 2301.40, down 0.07%. Did you guys miss this one from yesterday? Reuters, Tesla short sellers lose nearly $5.5 billion over 4 days, S3 Partners says. You see, Tesla missed top and bottom on their last earnings call, but their CEO was smart enough to bring something exciting to the table: lower price models in the future, and the stock rallied, burning the shorts. Did Adam do that on our fourth quarter call? No. Do you think he could have rallied the stock if he said he was done diluting for the balance of 2024, excluding an emergency? I do. Don't you think he should have at least showed up with another concert film for our new distribution company? He did say the phone was ringing off the hook after Taylor and Beyonce. Did Adam bring anything exciting to promote at CinemaCon? No, everyone else did. He just said bankruptcy was unlikely and that 2025 looks good. Here's hoping he doesn't come empty-handed to next week's earnings call. Maybe he'll float the idea of another reverse split for you fanboys if the stock keeps falling. I know how you love him. And from Business Insider today, Trump Media is up 92% since launching a crusade against short sellers. Hey, maybe Adam should do something like this. Oh, that's right. He said it's not his problem. He's seen no evidence of synthetic shares either. I know sometimes it feels like we apes never land any punches on our enemies, but that's not true. It's Uncle Frank's job to let you know when one of our enemies gets kicked in the balls, and I'm delighted to share that information with you every time it occurs. From today, Blackstone has sold 1740 Broadway in New York for $185 million, but that's a $420 million loss. So who's Blackstone? They're a huge, shitty, distressed credit private equity firm like Apollo Global Management, who just yesterday was sued for some $20 billion illegal life wagering scheme. That's the firm Adam ran for 9 years just before coming to milk AMC to death. Apparently, Apollo was taking out life insurance policies on elderly people without them knowing. When I called these people the grave diggers of Wall Street in previous videos, now you know what I was talking about. Anyway, Blackstone backed the shitty little distressed credit hedge fund you know as Onara Capital. Citigroup, a short seller of AMC and our chief investment banker, introduced AMC senior management to Onara so they could rig our shareholder vote. Just my opinion, you could read the emails for yourself. You can also thank Citigroup for the APE, its conversion, the reverse split, and I guess the over 90% loss in our market cap. Them and Adam Aaron, of course, for signing off on all of it. You know, today we pounce. Anyway, there wouldn't be an Onara Capital without Blackstone's backing. Onara got a huge piece of APE at an enormous discount in exchange for voting the way Adam needed them to. Onara made so much freaking money so quickly as an insider, they were forced to return some of it. I think $3 million. They were sued by 2 AMC shareholders, and the windfall profits were returned to AMC. $3 million, I think. I've long suspected that this was a sham lawsuit designed to protect Onara and its undertaker leader, Himanshu Gulati, from subsequent litigation down the road, but I can't prove that. However, 3 weeks ago, Blackstone-backed hedge fund Onara freezes illiquid assets. Onara Capital, a $1.3 billion hedge fund backed by Blackstone, froze its hard-to-sell assets from redemptions after piling on losses. You see, guys, you reap what you sow. Sometimes you just have to wait. And here's another story about one of our enemies that tickles Uncle Frank. Weiss Multi-Strategy Advisors filed for bankruptcy about 2 months after the New York-based investment management firm announced it was winding down operations. The firm has between $10 million and $50 million in assets, but owes creditors as much as $500 million, according to its Chapter 11 petition filed in federal court in Manhattan. I reported on this when they announced they were winding down operations because they were a short seller and or put holder against AMC. I just want you guys to know this was a 46-year-old hedge fund. They gone now. That's George Weiss in the image. Say bye-bye, George. And from pensions and investments, Merced County employees cuts hedge fund target, ups fixed income. Merced County, California Employees Retirement Association cut its exposure to hedge funds in half and raised its allocation to fixed income following an asset allocation review. The reason I watch this stuff for you guys is I'm waiting for the stampede to the exit signs. You see, back in the 2008 crisis, 700 hedge funds closed. The fastest way to close a hedge fund is to take all its money away. You see, guys, these are the kind of headlines that gets Uncle Frank excited. From the Financial Times, February 6th, decline of the star stock picker. Investors pull $150 billion from equity hedge funds. And then from just a month ago, why this January was the worst for hedge fund flows in years. But then last week, hedge funds had good returns in February, but investors pulled money out anyway. Let's hope March is the same result. And from my Theaters Are Dead file, Dune Part 2 surpasses $700 million global box office. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.